Hey everyone, someone asked in one of my videos, Noel, can you talk about something that's been bothering me? A popular luxury watch dealer has been paying his employees by way of paying for their rent for their beachfront apartment and other things like leasing a Corvette for the videographer to use. Is this legal? Can you comment on that from a tax point of view? That's a very interesting question, and I'm glad you asked. In this video, I'll discuss the ramifications of what are called disguised wages and what you can do if you're the victim of a disguised wages scheme. Later on, I'll talk about an interesting story with Donald Trump's former CFO and a similar tax avoidance scheme. Keep watching to find out more. Hi, I'm Noel Lorenzana, your friendly neighborhood accountant. So the issue here is with what the IRS refers to as disguised compensation or disguised wages. Here's what they have to say about it. In tax law, disguised wages refer to payments made to a worker or contractor that are intended to appear as something other than standard income, with the purpose of reducing or avoiding income or payroll tax liabilities. Basically, if you have an employee or independent contractor providing services to your company, you typically pay them for those services, which is their compensation for the services provided. Normally, the business can deduct the payments on their taxes. The business would also provide the employer a W-2 or, for an independent contractor, a Form 1099 NEC. These tax forms provided to the employee direct them to pick up the income on their personal tax return. From a tax perspective, the practice of disguising wages can lead to serious problems. Let's break it all down for you. Payroll taxes. So what's the harm in working around the rules and paying employee expenses directly, like for the rent expense for an expensive beachfront apartment? Well, on the surface, it may not seem like a big deal, but it's essentially tax evasion. By doing this, the business is avoiding employment taxes, which is 15.3%. And if you think about it, robbing the employee of their share of the employment taxes, which is Social Security and Medicare at 7.65%. The employee is also likely avoiding personal income taxes because it's doubtful they're reporting the disguised wages as income on their tax return, since they're probably not receiving tax forms to report the income. Think about it. The average income tax rate is 24%, so there's also that. Employees are also not able to take advantage of unemployment compensation benefits and workers' compensation if they get hurt on the job. The employee may also not be protected by federal employment laws. Do you see? There's fraud occurring on so many levels. In this example of paying an employee's rent and paying for their leased Corvette, I don't know if they are or they aren't, but the employer should be reporting these payments as compensation to the employee. If you run the numbers on $50,000, for example, then that's $7,650 in employment taxes that's been avoided and $12,000 in personal income taxes on the employee side. It adds up and would also be subject to heavy fines, penalties, and interest. And keep in mind, the IRS is very strict when it comes to employment taxes. If you look at their budget, employment taxes is largely what funds their operations. They view employment taxes as like a trust fund. Employers are basically custodians for withholding and remitting employment taxes to the IRS. The taxes are to be collected and remitted to the IRS in a timely fashion. To not remit employment taxes to the IRS is a big no-no. They pursue this aggressively and can even go after people individually if they can determine they're a responsible party. Audits and scrutiny. You know, if someone is caught trying to pull a fast one by disguising their wages, they might land themselves in a whole lot of trouble. You see, the IRS could decide to take a really close look at everything else they've got going on, financially speaking. It's like inviting an IRS agent into your home. They'll comb through everything to see if things add up. It's not just about wages anymore. It could end up being about their entire financial life. In this example of the employer paying an employee's beachfront rent for an apartment and Corvette lease payments, these aren't even allowable business expenses as far as what I can tell. So think about it. Personal rent and lease payments on a personally used car lease are not eligible business expenses, so no business deduction would be allowed. The employer can't deduct these on the business side. When people or businesses hide their real wages, it's not fair to other businesses who play by the rules. It's also not fair to the employee who's getting robbed of the benefits previously mentioned. But it's also important to remember that not everything that looks like hiding wages is bad or against the rules. Sometimes businesses change how they pay people to lower their taxes, but they do it in a way that's legal and follows IRS rules. They usually get help from professionals who know a lot about tax laws in order to do this. Even though hiding wages might seem like a good idea to save money in the short run, it can cause a lot of problems later on. It's generally not a good idea and can be pretty risky. So the big news this year was with former President Donald J. Trump and his longtime CFO, Alan Weisselberg. They had a very similar decades-long disguised wages tax avoidance scheme. Weisselberg admitted in court that he should have paid taxes on off-the-books compensation totaling roughly $200,000 in 1 year, which included a luxury Manhattan apartment overlooking the Hudson River, and 2 Mercedes-Benz car leases, among other things. Does this sound familiar? Weisselberg could have served up to 15 years in prison, but he made a deal with the feds to testify truthfully against the Trump Organization, which reduced his sentence to 5 months in Rikers prison. But he still had to pay $2 million in back taxes and penalties to the IRS. To wrap things up, if you feel that your employer is not doing things properly, maybe they're paying you as a 1099 independent contractor, when in fact you believe your classification should be as an employee, you can fill out an IRS Form SS-8 as shown here. It's a way to request from the IRS to intervene and determine the status of a worker for purposes of federal employment taxes and income tax withholding. Filing a Form SS-8 requesting a worker status determination means you're asking the IRS to establish if the services you provide to the company are those of an employee or an independent contractor. As an employee, this form/intervention can help you in preserving your rights and benefits. Please share your thoughts with me in the comment section below. I hope you enjoyed the video. If you could do me a favor, like the video if you found it insightful, consider subscribing to stay connected. As always, thanks for watching and see you in the next video.